Hello, everyone. Happy Monday morning. Huge week kicking off this week. It's not going to be boring. Hey, Patrick. Good morning, Richard. What's the three indicators of best that complement each other for trends and reversals? Well, besides using the rotation zone concept, which I love, the other indicators, if I had to choose three, I like the short term RSI, so very short term, five or less for the length of that. I like Bollinger Bands or percent B because percent B is based off Bollinger Bands. Spikes into above certain Bollinger Bands show very strong reversal patterns. And when things climb the bands or decline on the bands, it's a generally continuation once it breaks out. And I like the stochastic RSI. Those are, and that's a longer length than the RSI that I use. So if I had to pick three, those would be the major big three that I utilize. All right. Good morning, Amit. Good morning, Martinez. Good morning, Chris. Is a trim line on Palantir broke? Could you retype that? I'm not understanding that. Tony, good morning. Good morning, Connor. Good morning, Sterling. Good morning, Jacob. Hey, Pep. So, again, I guess people are back from vacations tuning in because we got the Fed week. Let's take a quick preview. Today, we already had the Chicago Fed National Activity Index, and that was a pretty big drop and worse than previous. So, still no strength there. Coming up 15 minutes after the cash open, we have the manufacturing composite and services PMI flash indexes for the S&P. Those are the small to medium sized companies. All right, forecasts in contraction still for manufacturing, composite, and services, still forecast in expansion. Remember, the cutoff is 50, but a little drop forecast from previous. So I pay attention to this if it's a bigger miss. Then it's just your note and bill auctions. Tomorrow, you got your home stuff, consumer confidence. Tomorrow's really minor, and I don't think anything's really going to shake the markets going into a Wednesday Fed meeting. Again, mortgage information coming out first thing Wednesday. Then we have new home sales, crude numbers, but all things are going to be on the Fed interest rate decision, 1 p.m. Central, 2 p.m. Eastern. I'm not worried about the rate decision. I'm worried about the press. Well, I'm not worried, but I'm going to be paying attention to the press conference. The rate decision's baked in. They'd actually shock the market if they didn't hike 25 basis points at this point. So it's all going to be the wording on the press conference and how they going forward, whether they're leaning towards this being it, whether it's going to still wait and see, whether they're in skip mode, which is skip in September, blah, blah, blah. Thursday, and this is where it gets, don't lose your focus after Wednesday, because Thursday we have durable goods. We, of course, have jobless claims, but we also have the Q2 advanced numbers for GDP and the PCE rated based off the GDP numbers. And we got the core PCE prices. And then what else do we have? Minor, the Kansas City Fed. Friday, this is huge. We got the month over month core PCE, month over month regular PCE. So that's where that sits in consumer sentiment numbers. So everything Wednesday through Friday, huge. This morning, we'll get to earnings in a second, but the mega cap's up except for Tesla. So right now, comm services, energy, and basic materials leading, consumer defensive pulling back. Here's what I'm talking about still for Wednesday, 99.8. It's baked in. You look at the probabilities, you got a one and then a pause. One hike and then a pause through and a cut next March. So again, the more important thing is going to be the press conference. Fear and greed. We're still in extreme greed, even with a couple-day pullback. This was updated on Friday. We're still 1.1 standard deviations from the trend, extremely overvalued in most metrics. So, does that mean it has to end? No. Are we aware that we are in very toppy area? Yes. Gamma flip. Now this is interesting because we have the OpX, July OpX. Right now, 45.71 area is the gamma flip. We're trading 45.72, and technically this is based off the cash and SPX, but it's roughly in the same thing for the futures in that area. So we're right at neutral gamma right now, but the key gamma support area and the key gamma area to watch is 4,500 on any pullback, and I'll show you why that's important. And then on a rally mode, it's 4,600. 4,500 is where we can get a lot more put gamma and the delta to the negative side build, and we'd be in very steep negative gamma mode, which means dealers are selling into the decline. Right now, any rally besides the short-term OpX has dealers minorly hedging by selling into the rally, but the 4,600 we could get a fair amount of call gamma kicking in if we can take that out. In terms of earnings, we had Domino's this morning, but nothing really big. After the close today, Logitech's about name that most people would know. Tomorrow, Verizon, GM, 3M, GE, Spotify. So not anything that's going to rock the market, but nothing to be ignored. After close tomorrow, this is where it gets really interesting. We got Microsoft and Alphabet, Snap, Minor, and Visa. All right? But Microsoft and Alphabet can really move the market. So, right before the Fed meeting. So that will be interesting. Microsoft and Alphabet. Wednesday, we got Coke, AT&T, Boeing, Tilray. But after the close and after the Fed meeting, we got Meta and Chipotle. Thursday, McDonald's, which is important from a consumer standpoint. MasterCard, plastic shoemaker. And after the close, we got Enphase, Ford, Intel. I know a lot of people trade Intel, Roku. Let's see how crazy that thing still is. Then Friday, we got a lot of oil starting to kick in. ExxonMobil, Chevron. Do not ignore P&G from a consumer and inflationary standpoint. So, very busy week. And then next week's also very busy with earnings. But this week is huge for earnings. So besides the information coming out, we can't rest on our laurels. AMC to the moon, Coco. Fantastic. Is the trend line broken? We'll take a look at that. Good morning, Anissa. You're welcome, Richard. And again, thank you, everybody, for tuning in. So we had a couple-day pullback, one of them being the back and forth day on Friday. Again, major OpEx days. When this was, I think, the largest July OpEx. It's why trade them. They're just hard with the back and forth. We've officially nearly reconnected with the rotation zone. Now, we start breaking that 45.50 area. Here's what's interesting. The weekly rotation zone, which we have not technically reconnected with since the end of May, is back close, 4480 to 4500 area. And we have those key areas for the options. So if we do break the low from Thursday, which would also be breaking the daily rotation zone, I'll start watching for the bigger pullback into the rotation zone once we really break. And I'm not talking like a 5-minute. I need a close with some momentum coming below it there. Intermediate, very intermediate level would be 45, 44. And then the other thing I do right here is flip from this last run up, flip the harmonics around, and you see here 45.10 to 44.85 is between the 62.5 and 50, with the rotation zone being in the middle. So we get the bigger sell-off. That's the area. It's all leading to that area. Doesn't mean it has to happen. We could rotate back up and continue on our merry way. Daily cycles still have possibly a couple days until we get more of a cycle bottoming pattern. Resistance in the shorter term, 45.83, and then 45.90 roughly. A close above 45.90, focusing then on a retest from Wednesday's high area, because that would be the 87.5. So that's the way I'm mapping out the early part of the week game plan for myself. NASDAQ does have a potential little double bottom. S&P did not. The NASDAQ does. It would need a 4-hour close above 15,719.25. Then the first target would be 15,805. Next target 15,849, roughly 15,891. The key areas, because you see the retracements on the NASDAQ I have up here. You see here the key retracements from the NASDAQ. I'm just adjusting a couple things. Would be between the 50 and the 62.5. So that would be the first and second target should that double trigger. So that's what I will be watching for. If we break the lows from Friday. Now, Friday made a slightly lower low, but a nearly flat RSI, so you have a minor 4-hour divergence there. But if we were to break below there, the key area I'm focusing on is about this 15,450 with the bottom of the rotation zone. We drop below there, the next cluster is the breakout area right around 15,375, where we have a harmonic area in there. So if we did break through there, I'd watch for a spike low and then a close back above the rotation zone. Cycle should be bottoming in the next couple days. And on the weekly, NASDAQ has not technically reconnected with the weekly since the beginning of May. And that level to reconnect is about 15,200. So if we start a bigger pullback, that's where we sit. Maybe you've touched on this, thoughts on lag effects. I mean, the longer it sits up here, the more effect it does have on the market. But I just think the market's shrugging it off and focusing on the soft landing narrative. I think we will turn at some point on the dime, and then you'll have remember, it's people's expectations that drive things. And I think a lot of stuff is slowly deteriorating, but there's still too much money sloshing around. And the longer it sits in there, the more of the money it absorbs. But everybody's now focused on the soft landing. And let's just push the multiples higher, which at some point that narrative will shift. And I think it will shift very abruptly. However, what causes that shift? No idea. One of the things that will be cited is then the elevated rates, and then they'll start criticizing the Fed for keeping them elevated. But even if you go back to the FedWatch tool, right? The FedWatch tool, I mean, this is priced in. Look, even through a year from now, it would be roughly only back to 475 to 5. So you got 2 cuts by a year from now, potentially. So this is even if they cut a little sometime next year, it's still a lot higher for longer. But I think the market, once something snaps or something comes out, the market will start focusing on that narrative more. It's being ignored right now. The Dow, so far, sideways correction. Sideways correction, you see here, I'm watching the bottom of the 4-hour rotation zone, and what I'm watching for is daily coming up to possibly push the price to a breakout. The 87.5 rule would be at 35,807. Flopping back to the S&P, if we do rotate back up and break out above last Wednesday's highs, remember the 87.5 rule is 46.45 to fully complete that rule. The Russell, nice 3-day pullback so far, back to the daily rotation zone. The key areas that I'm watching on the Russell, for the Russell traders, there's no double here. To the upside would be 1987, then 1992. A close above 1992 would be a retest of last week's high and then a probable breakout. If we break down below, roughly, I'm watching this key 1965 area, and then close below 1960, I would be watching for a retest of about 1941. So that's exactly how I'm mapping out the Russell, and that doesn't even take me back to the weekly rotation zone. And the major level on the weekly rotation zone is all the way back at 1903. So, VIX in the 14s, but we had the OPEX stuff and slightly elevated. But again, 15 is my key area. Other than that, it's just bouncing around in here. DAX, so far sideways. About 16,200 for a breakdown, break out about 16,320, 16,300 at least on some momentum basis. Notes finding support at the first level from the triggered double top on the daily. But this should be pretty quiet going into Wednesday. We still have the probabilities that we could still at least see back to a 111.22 on a yield basis. That would still be spiking to about 391.5. 10 twos, triple bottom territory again, and retesting this major support level. Dollar index continues finding some resistance at the rotation zone. We break through there. The next major target for me is 101.61. I'm watching, though, with cycles getting to top in here, at least a pause or some kind of minor pullback. After, remember, we completed the little mini double bottom last week. The key pullback level is 100.04, and then on a closing basis, 99.80. Crude breaking. We've now tested the 200 roughly 3 times here at the middle of July. Here was a close enough test, the 19th of July. We retested on Friday, trying to break out today. We really get some momentum on. My minor level is 79. My major level is 88, roughly 81. Okay? And gas is also starting to break out to the upside. Not natural gas, gas futures. Gold, roughly, this was hit the 50. Pattern's nearly completed. If it does break down, it's 1958, but watching for a slight bounce. Now, my longer term in gold, we'll be watching within the next week or so for a topping pattern, a more significant topping pattern than a rollover to at least retest the lows back from end of June and possibly the 50 again. Before if we do break below there, could get a little interesting, but we could be doing an A, B, C wave count back, a corrective wave count before putting in a more substantial major bottom. I don't think we have the major bottom yet. I'm watching for a more substantial major bottom coming up. Yen right now, yen pulling back, but dollar index not. We are in between this 142.10 to 141.20. So I'm watching for the reversal, but I need to really get a close back below 140.20 to confirm. If we hold in there and then get the close back above 142, I'm watching for the retest of the beginning of July highs. Euro pulling back to this key 50% level, so I'll be watching over the next couple days for a bottoming pattern in the euro. Pound back to the breakout level. As long as we don't close above 127.95 area, I will be watching for a bottoming pattern in here. If we do close above there, I'll start focusing on a bigger pullback there. Bitcoin breaking very key support that's held since the 3rd week of June. So I will be watching for the bigger pullback now in Bitcoin. Could not break out. Next major support levels 28,280 to 28,300. Spiders, I'm trying to get through everything. I just wanted to do an overall preview since this is a very busy week. The spiders, key resistance is 154.25. We break above that. We got 156.50, and then the cluster area, 456.50, and then cluster area at 459. Key support is still about 451.50. We break below 451.50, and next key area would be about 449.50 to 450. That's where we sit with the Spideys. The Qs, again, a little gap up this morning. The targets I am looking at here, I'm using the harmonics, about 378.40, 380, 381.60, and 383.20 to the upside. Pullback level, the major support, should we break Friday's lows, coming in at 373. Tesla closing below the 62.5. gapping down. I'm still watching for a reconnection with this potentially 248 area to about 245 before putting in a bounce and then putting in a more significant topping pattern. NVIDIA, we might get a bounce today. What's the level that would invalidate the double? Because that was triggered. The level is all the way back at, on a closing basis, 469.53. On a trade through basis, 473.31. Otherwise, the breakdown area, which is major resistance, is 450 to 450.60. Right now, trading 446. So if we bounce that and roll over, remember the first target is about 436. Then you have 429 and then about 421. Hey, Heinrich. Thank you for tuning in. So that, we got it in before the open. Oh, we wanted which one from Palantir. Is the trend line broken? Well, you have a couple different trend lines. The one I would be focusing on right now is this one, if you're talking in the short term. That's the key daily, and it lines up with the rotation zone really nice. So that's where I'd be watching on a close below that. Your bounce level, your minor, let's see, looks like a slight gap up today. Your key resistance is coming in about 1715, and then you have 1715 and 1787. So this is, I would not say that trend line's broken. And that's the more important one to me. So that's the key thing I would be watching. You start breaking, because that would also break below the rotation. So you break below that, I'd be watching for the retest of the 50. Which you see, you got some pretty key support right there also. But as long as that doesn't break, it's so far just a standard pullback to a very key support area. Can we take a look at, let me get to Amazon, then I see you, Pep with Gold. Amazon, I mean, their earnings aren't till next week. I mean, it's holding right here, key support. Closed slightly below, but right. I mean, this is a support zone. So as long as we really don't get a close below about 129.35, if you do, I'd watch for the pullback, bigger pullback heading into earnings possibly, and that would be the area of the 50. But as long as you don't get a close below, I should say Thursday's low, that would be the key low I'd be looking at. And then the levels below that would be 126.10, and then was 125 area. Did this form a little mini double? Let's see if it's valid, because it's triggered if it's valid. And yeah, so it already hit the first target, but the next targets are 127.86 and the lower probably target 126.71. Back to Pep and Gold. 4-hour head and shoulders. Yeah, if you start breaking, it needs a better formation on a shoulder on this side, Pep, on the right side. But if that does break, we can see how that's looking tomorrow, because I want a little better formation on the right-hand shoulder. But roughly, if we're going to map out where that could go, I mean, we don't know where it's going to break yet, but that could be a pullback. The first level would be about 1943, 1934, 1925. So that would start the bigger pullback beyond this little double we had in place before. You are welcome, Chris. You are welcome, Jacob. So there's your answer, Pep, on the head and shoulders. All right. 2 minutes till the open. Remember, not a lot of stuff minor. The S&P numbers coming out, the composite numbers coming out 15 minutes after the open, but then it's going to all be based off of what's intraday headlines today and positioning pre-Fed. So today is going to be positioning pre and tomorrow. And then we have everything backloaded this week and tons of earnings tomorrow afternoon. So stay on your toes, know where your stops are, know where your targets are, and trade wisely. I'll talk to everyone later. Bye for now.